Hi, and welcome to another weekly recap. So, today we are going to recap week 16, which is from June 9 to June 13, 2025. And on this week, I just have one missed trades, which is on GU, and I'll tell you why I missed a trade. And it's a fear of losing trade, a fear FOL emotion that kicked in when I failed to place this trade. So, overall, if I had placed this trade, then this would have been one winner. Since I didn't place that trade, it's no trades overall. And I also escaped from one loss using the mitigation entry concept instead of confirmation entry. I'll also explain that also in this video. So yeah, let's jump into GU first, and then we can jump into XAU later. So in GU, as I said, there is only one missed trade. So let's see what happened on this day and in the rest of the days, and what was the price action in this week. So jumping into the board, on the GU from June 9 to June 13. As in the previous videos, I'll be explaining only explaining the daily chart only for the first day and for the Thursdays and Fridays, because most of the days the daily chart remains in the same area of value. So let's not waste time on the daily chart. So let's kick in. From the daily perspective, the daily structure is swing a bullish structure, and we are having this strong buy side liquidity sweep, but still the demand is holding the price. We can't expect the price to liquidate the buy side liquidity and then immediately push down. We need structural confirmation in order to confirm that the price is going to go down. For now, we have seen that the price has liquidated some of the buy side liquidity, but still this demand is holding the price. So what I'll do is I'll wait for more confirmation in the lower time frames before getting involved. So if I get some kind of lower time frame confirmation, then I can look for longs, even though there is some buy side liquidity. That does not matter for me as long as the structure is holding the price. So moving forward for the, zooming in to the 4-hour chart, here you can also see that the buy side liquidity sweep in the 4-hour also, and this is seems a very strong POI that swept liquidity chalk bearish. This is more or like an internal break of structure for me, but since I am using a very large swing range, this is the internal structure for me. So if the price changes the internal structure like this, or changes the internal structure like this, then I'll be using this as my swing low, and this has my 4-hour swing bullish boss, because I don't want to deal with large ranges. I'll be minimizing. I'll be having dealing with only short ranges so that I can focus on the current price action. Cool. So this is what we have in the 4-hour chart. So this POI seems valid, and there is some low resistance liquidity here which the price can take. So what I can expect is price to mitigate this uh, supply, and if I get suitable confirmation in the H1 time frame, then that would be great to look for sells. And actually we got that one. So this is what the H1 looks like. Though the price, the swing structure of the H1 is bullish, and the price has reached the discount prices. Looking for sells, it's highly low probable at this stage. But since this POI seems uh, highly valid, and it can give us some strong bearish reaction, we are taking sells from this POI, but with a confirmation. So that confirmation is the chalk bearish, and price did chalk bearish, and this was the POI. I was supposed to take trades from this POI. This happened at 12:20. Remember 12:20. And usually we consider any bullish candle that comes in this leg as lead, but this time for the to become sorry to be on the safer side. So, and also one more thing is that there was a M15 demand zone that was formed with sweep of liquidity. So if this demand can hold, and it can push the price up, and this M15 structure can continue. So there are a lot of possibilities for the trade to go out. And also, as I also mentioned, the daily demand is holding the price, so probably price can push further up. So there are a lot of possibilities for the trade to go away from me. So I just wanted one extra confirmation, like, yeah, this is a valid lid. Just one extra confirmation is that price to mitigate this fair value gap. That's it. So if the price takes out this candle's high, I'll be looking for sells. That's all. Yes, it's not a major it's not a major I'm not adding extra confirmation. I'm not adding volume profiles. I'm not adding supply and demand. support and resistance. I'm not adding any indicators to my trade, just one small adjustment that I'm expecting the price to push further up. Usually, price fills some imbalance to push further down, so I just expected the price to fill that imbalance for me. But uh, you know price didn't do that. Price just took out this lid, and it with the news it pushed down. So that would have been a solid 2 point more than 5 hour trade, because it invalidated this demand zone. It was a flip, so obviously this would be the next area. So probably if this gets flipped, then it should be more than 5 hour. So yeah, actually, I know, yeah, this seems valid when you are in the desk, when you are trading live, but it's now it seems you know um, pointless after the trade is ended, after the hype is gone. So this is what the trading is. uh, yeah, like having a clear mind, having a clear mechanical structure sometimes helps. Sometimes your instincts plays out, sometimes your instinct doesn't play out. In this case, my instincts set to wait asked me to wait for the one small extra confirmation, but that failed, and a beautiful trade gone without me. So yeah, it is what it is. At 13.7 it was an break even trade, so I expected the price to come to the 61.8 level at least to take some confirmation entry, but price never returned back. It just kept moving down. It flipped this demand zone, and all these are low resistance liquidity, so obviously price would push down to take out the swing low. That's obvious. So that ended up as a missed trade on June 9. So coming to June 10, the daily is still in the same area of value. The demand is did not get shifted. The buy side, the this high is also not yet taken. So simply the price is ranging from year to year. But let's take our chances. Let's wait for the session bias, session direction to kick in, and then we can trade in line with the session direction. So here we go. This was the supply that got respected yesterday, and there was a massive push down, but price did not take out the weak internal low. So still we got some chance. Still, if there is some H1 structure that we can capitalize upon, we can capitalize and target this lows. So let's not lose hope. And yeah, from the H1 perspective, this seems like a valid POI, because this is the only supply that is holding the price. So if the price mitigates this one, an EM15 LC2 or mitigation entry, whichever is valid, I'll just take it, and then it's a quick in and out trade. So I can expect this low to be taken out, and if possible, this low can also be taken out. So that was the game plan, but you know price just pushed down without giving any opportunity, and it's not a missed trade. The set of rules didn't play out. So once the price, once the H1 was bearish, the next option was to play the swing pullback. So I waited for the price to do something like this so that I can look for some complex pullback. I know that these kind of trades are very messy, and they take a lot of time to hit the take profit, and sometimes you will be emotional, and with each candle, with each M15 candle, you will be forced to get out of the trade, get whatever the market wants. Sometimes you'll be thinking that market is low, probably this is a false trap, and you'll get out of the market. These trades are very subtle, and they tend to trigger emotions. But yeah, these two work, provided if I get some suitable confirmation. I was planning to look for these kind of trades, complex pullback trades, but there was no complex pullback. There was one strong rejection, and the price kept moving up. So that's valid. That's not a valid setup for me, so I didn't take any trades on this day. So moving forward to June 11, so this demand is still holding the price made a strong rejection, but still the opening candle was a bearish candle. So we can expect this demand to be taken out. If this demand is being invalidated, then we can expect a deeper pullback, at least to this demand level, probably. But that's a different story. For now, the demand is holding. Let's look into the low time frame confirmation. So from the 4-hour perspective, we can see that there is a strong buy side liquidation and there is an internal post bearish, and the price is holding that internal bearish structure. So I'll be just focusing on looking for shorts, playing with the 4-hour internal structure. And also, I assume this as the 4-hour swing structure, which means that the 4-hour discount is somewhere here. So there is still room for the price to come down. So I'll be happily looking for sells. But the only caveat is the daily demand is still holding the price. So from the H1 perspective, the price actually chalk bearish, and this seems like a valid POI, but this can act as an inducement for the POI above, because this is the supply chain that is being getting respected. So this can become an kind of inducement for the supply above. So I'll wait for but this supply can also be respected, and this can also bring the price down. So just to not miss the trade, I'll be looking for um, LC2X or MC entries. But for sale, okay, yeah. But for this supply, I'll be only looking for the MC entries. I'll be entering here, boom. But for the above POI, like MC entries or LC2A or LC2B, any, but not definitely not the LC1 models, because this is a very big POI, so I need more confirmation. So price mitigated this supply, and here we go. And there was an LC1, but I'm not taking that LC1. I waited for the price to mitigate. Here we go. Price mitigated this supply, and this is the chalk bearish line, and price chalk bearish. So this was the somewhere around 61.8 level. Sorry, this was the supply that was holding the price. So I marked the supply, and price mitigated this supply. So first I kept my trade right here. Then this candle was invalidated, so I kept my trade right here, and stop loss just above. But this candle was also invalidated, and price took up and smashed the above POI also. So I didn't get tagged in because my entry was right here. If this candle came down, then I would have been tagged in, and basically it's a sell stop order, so I didn't get tagged in. So this happened at 2:30, and the trade idea is no more. And yeah, what we got is an strong, there is some buy sell liquidity, which you can see it from the high time frames. But from the H1 perspective, what you can see is strong internal bullish structure shift. That is enough for me. That is enough for me to continue looking for longs till we get a strong internal bearish shift, and then looking for sells again. So yeah, that's it. So tomorrow on June 12th, you already know what is the plan. Looking for longs from the internal demand zones of the H1 structure. So here we go. This demand held itself, but there is kind of low resistance liquidity being built upon. That's fine. The target would be this high because this demand is held and the price is pushing up. So obviously the high would be the target. And here we go. We got some 4-hour demand. This is not a mechanically valid demand zone, but just to identify which demand is holding the price, I mark this one because this is the demand zone that made interaction with the supply. So I assume this could be respected and price can push further up. So that's what I meant. Cool. Moving forward onto the H1 structure. So this was the 4-hour supply demand zone. So all I can do is wait for the price to mitigate this 4-hour supply, 4-hour demand, chalk bullish, then I can look for longs. So why I am not entering longs directly from this 4-hour supply? It's because of the H1 structure. H1 structure is swing structure is bearish, and no price is in the premium levels. So anytime the price can, if the price mitigates into the 4-hour supply zone, then it must make some kind of chalk bearish before mitigating into the 4-hour demand zone, right? So just if the price that chalk bearish or the fractal bearish structure could hold itself, and it can push further down and take out the weak swing low. So that could happen. So in order to be on the safer side, what I'm doing is I'm just waiting for the price to mitigate into the 4-hour supply, give me a strong shift first, and from the freshly formed POI, I can confidently look for sells that this high can be taken out. So that adds more additional confirmation. But yeah, no price. Uh, okay, yeah, this is that POI, right? Good, you got it. Okay, yeah, this POI was actually mitigated, and that POI is this one. So this price actually mitigated this POI, and it pushed straight up. So was there an entry right here? No, there is no entry. That's what I'm going to show you. So there was kind of low resistance liquidity that was good. No liquidity to target would be very good. And yeah, this was the POI, and it has also got some inducement. So I could have directly taken LC ones, but as I already told you, I was not interested in direct M15 entries itself. I was waiting for some kind of H1 confirmation, but unfortunately, I didn't get that H1 confirmation. Price just tapped into this POI. There is no chalk bullish. There is one straight push up making bullish I boss. That's it. So suppose if you guys want to look into the M15 entries, there is none because price just mitigated into this PY. There is no LC2A or LC2B, just mitigation and then straight push up, no straight push up, and there is no pullback to play the confirmation entry also. So it's no trades, definitely no trades unless and until you have H1 risk entry in place. So that's not a valid setup for you guys, I think so. So otherwise you would be in a lot of losing streak. So yeah, again, this high was not yet taken. Again, price swept the this high, and there is strong bearish shift. I then today I saw this low resistance liquidity. Like on June 13th, I saw this low resistance liquidity. Yesterday, I didn't write a note about this low resistance liquidity because I didn't find them. But today, with this, because of this bullish um, sweep, I mean buy side liquidity sweep, I found some sell side liquidity, so which the price can target. Cool. From the 4-hour perspective, it's like playing the swing pullback. The price at boss bullish. I told you yesterday that I would be, I mean, on just a few minutes ago that I would be changing the 4-hour swing structure, and here I go. I did that one, and after this 4-hour as boss bullish, 4-hour as chalk bearish, and this is a POI from which I can look for sells targeting the low resistance liquidity right here. Cool. Plan is simple, and all I wanted is the price to mitigate into the 4-hour supply and chalk bearish, and I can look for sells. And by the way, this is H1 PY, sorry, H1 time frame. But there is also another game plan. So if we have a chalk bullish right here, and price coming down from the POI, then I can look to trade the quick in and out targeting the 4-hour supply above. So that would yield us 1.5 to 2, or depending on the liquidity candle size. And yeah, price actually chalk bullish, but there was no entries. I'll show you. Okay, I didn't take the okay. There was no entries. Price just came down and invalidated the POI, so there was no entries right here. And it is at exactly at 3 o'clock. Price mitigated this supply. So that was end of the session. So there was no chalk bearish or nothing else for me to look for sells. So I had to leave the desk empty-handed, missing one trade. You can call that as missed trade, or kind of um, being too conservative, missed trade, or whatever you call it. But that's that trade was definitely into taking, and I missed it. So I will call it as missed trade. But in future, I will not be aggressive to match up with this that losing that missed trade. Um, Definitely, I'll stick with the rules, and sometimes I listen to my instincts. Sometimes they play out, sometimes they help me get out of some losing trades, but sometimes they also you know uh, do some unpleasant things like this. It is what it is. So we have to accept it and move forward. We are not robots to trade mechanically. We have some emotions that running in back of our mind that um, decides how we see market structure, how we enter trades, how long we are in the trade, and that also uh, determines our exit points also. So yeah, let's move forward into XAU and see what happened on XAU. So let's continue with the XAU. So let's close this one and let's open XAU. So in XAU, I did not get any trades on this week. It does not mean that there was no trade. There was the price was consolidating. There were some aggressive trades. There were some LC ones, which if you had taken, sometimes it would lead to profit, but sometimes there were some losses. So overall, I try to avoid LC ones for, I can take LC ones, but only for the supply and demands that form during the session. So if the supply and demand formed, outside, in the previous day's London Open, or in uh, the supply, if the POI is a day older, then I, don't take usually LC ones, and I'll wait for additional confirmations like LC2 X models or a mitigation entry models. So I'll show you what trades were possible and how could you capitalize more being aggressive than me. So let's jump into the chart and see what happened on this week for XAU. Moving on into the daily chart, I'll explain in depth in daily only for Mondays. And suppose if there is any change in the area of value for in the daily chart, then I'll give it a brief explain. If it is not, then I'll directly skip to the 4 hour chart for the rest of the days. So coming to the daily chart on June 9, the swing structure is bullish and the internal structure is bearish, but the price has mitigated into the weekly demand zone, and this small internal structure is holding the price, and I can expect this structure to continue holding the price till it takes out the weak swing high. So that's the game plan. I mean, that's the overall expectation. So this demand is currently holding the price, but there is a caveat. The price had swept some strong buy side liquidity and it has pushed down, which means that there is no price literally chalk bearish. Initially I did not notice this one, but I think on Thursday I noticed that this is a chalk bearish. So this red line actually should come here, and I should have, expected, played shots. Nevertheless, I did not directly look for longs from this daily demand zone. I waited for some lower time frame confirmations before looking for buys or looking for sells. So that does not matter for me right now. So let's jump into the 4 hour chart. And from the 4 hour perspective, the swing structure is bearish and the internal structure is currently bullish. So probably I'm expecting, the swing the internal structure to shift bearish in order to facilitate the swing structure and take out the weak swing low. But the swing structure was actually bearish for a while, but it again became bullish. But now price swept some liquidity and it is again chalk bearish. So this fractal structure can hold the price, and this daily demand can be invalidated. That is an expectation, but let's wait for confirmation and just play the price action. So yeah, from the H1 perspective, the H1 swing structure is bearish. The H1 structure facilitates the 4 hour. I mean, meets the 4 hour objective. So now, since the 4 hour is the swing structure is bearish, and the once the internal structure, the H1 swing structure shifts bearish, then we can say that this H1 swing structure will remain bearish till the price takes out the weak, H1 swing low. So that's the expectation. So now, since the H1 structure is swing structure is bearish, and recently the price has done boss bearish, and the price is still in the daily demand zone. So anytime that the daily demand can hold and push the price up, so we can't expect anything from the price. But what we know is price boss chalk bullish. So after swing break of bearish swing break of structure, we are having a chalk bullish, which means that the swing pullback can start and price can mitigate up to this demand zone, that supply zone, having this as the inducement. So if the price fail to mitigate that supply, at least the price will take out the buy side liquidity. So this can be my first target and this can be my second target. 50% of this one would be my second target. If the price comes into this POI and if all the M15 criteria is being met, so I can look for buys. So that's what the game plan is. But at the end of the session, there were no trades. Price just consolidated like this and nothing really happened. So it was a chill day. And let's move on to June 10. So price is still in the same area of value for the daily. So let's move on to the 4 hour chart. But here you can see in the 4 hour chart, um, you know, internal structure is still bullish, but price has swept a massive buy sell liquidity and started to push down with massive bearish momentum. So with this bearish momentum, there was a pullback, and price chalk bearish in this leg. So what we can obviously expect is this low becomes weak and can be targeted, and this structure is same as here. So here we see that there is some um, chalk bearish, and this low can be easily targeted, and obviously if there is some momentum, then price can move and take out this low also. So from the H1 perspective, this seems much more clear for me. Why? Because this supply which swept liquidity and chalk bearish in 4 hour, it's actually an internal break of structure, internal bearish break of structure in the H1, and this supply has inducements, and there is low resistance liquidity for me to target. But one caveat is price did not reach the premium prices, so uh, price can still push further up to mitigate this demand zone, and then it can chalk bearish later. So there is one possibility, but yeah, since we are having some low resistance liquidity kind of stuffs, I am happy to take a loss from here. So this is M15, and there was a possible LC1, but I was not interested in LC1s because this POI was formed yesterday. So I'm waiting for an confirmation entry or uh, LC2X models. So this is the first time that there is an LC1. So you guys could have been tagged in. Let me see. Yeah. If you had stuck with the LC1, then you guys would have been tagged in and got tagged out instantly. So that would have been one losing trade. But the interesting fact is you are getting a fake break. Here we go, and LZ2X model, a fake break and a pullback inducement. So I kept my stop loss just below, and sell stop just below, and stop loss exactly here, but I was not tagged in. Yeah, I was not tagged in, and price kept going up, and it eventually take out eventually invalidated the demand, the supply zone. So now, technically speaking, price has continued the internal bullish structure. So in order to look for sells, what you need to do is wait for the price to chalk bearish again, probably, which won't happen today because just two more candles are left. So as expected, it happened, but this was the 3 a.m. candle. 3 to 4, that we will call as 3 p.m. candle, and price actually chalked bearish after mitigating this supply. So this could have been a very good POI to look for sells, but I don't trade off during off sessions, and very good liquidity to target. So cool, but I don't trade these off sessions, so I'll skip that one. So on June 11, price is still in the same area of value in the daily. The daily demand is still getting respected, so there is nothing much to talk about. And yeah, price actually chalked bearish, but it did not take out the 4 hour internal low. Sounds interesting, and the price is building up some sell side liquidity. Probably that's what my mind thinks about it. So the internal structure is bearish, so we can continue to this look for bearish structure unless and until we get a strong bullish shift taking out this at least this high, and then we can look for buys. Until then, whatever the price does, that seems like a building of liquidity for me. So from at least for my eyes. And here we go, from the H1 perspective, what I say is, the internal structure is bullish, and price can respect this demand zone and push the price up. But there is a caveat. As I said in the 4 hour chart, this could have been a low resistance liquidity, and the price could smash it and take out the H1 swing low, because also the price has reached the H1 premium. So, and it has also chalk bearish right here. So chalk bearish, and this is also a very high probability supply, and this is also a good quality demand zone. So literally the price is stuck between supply and demand zone. So I can't just take trades and lose my capital. All I can do is wait for additional confirmations and then look for entries. Whether it is buys or sells, I'm open to anything. Price mitigated this supply, reacted from it, and then actually chalked bearish. So this was a valid POI for me to look for sells, but price mitigated this one, and there was no entry right here, and obviously there is no entry from this fresh supply zone. So why there was no entry here? Actually, there was an entry for you guys. I'll tell you why. Yeah. Here we go. Here, clear case of LC1. So if you had placed your trade right here, then that could have been a winner. So earlier you got one losing trade using LC1, but here this was a winning trade. Yeah, it's a random distribution, so you can play your odds and get profits and or sometimes get losses as well. It's up to you, but for me, one losing trade will affect my psychology, so I'll be more conservative. So instead of becoming aggressive and again becoming conservative and missing some trades, I'll be conservative and skip these trades. These missed LC1 trades is not affecting my psychology, but if I miss uh, LC2X model trade, then that affects my psychology. I mean, when I'll miss those LC2X model, when I take an LC1 model and get a loss, I become conservative. Then I wait for LC2X model for the next trade. Where I should have used LC1 model, I used LC2X model, and then I missed the trade. So that affects my psychology. So instead of switching between aggressive and conservative, let's be conservative. Let's take it slow, and I'll stick with my when to use LC1 rules and when to use LC2X or confirmation entry rules. So yeah, here we go. From the daily has not yet changed. It's June 12, not yet changed. But here I noticed something. Price actually chalk bearish. So then I marked this supply zone. Then I found that price is, yeah, it is sandwiched between supply and demand zones. And one more thing is, the swing structure is bullish, but the internal is bearish, and there is some kind of strong bullish structure being stepping into the market. But yeah, yeah, most of the time the swing structure will hold, and we can expect the swing structure to continue taking out the bearish internal structure. So this is the last demand, I mean last supply that is holding the price. If this supply gets failed, then there is no stopping the price can continue till we get this weakening of the supply and the chalk bearish. So what to look for today? Two things can happen at this point. Price can either flip the supply and stick with the swing structure, or the price can respect the supply um, that is formed via sweep of liquidity and continue with the bearish internal structure. So if this supply was was not formed like this, or if this supply was formed something like this, you know something like this kind of low resistance liquidity above, then I would have not worried about sandwich trades. I mean, sandwiched between supply and demand, those kind of stuffs will never pop into my mind. So this seems like a very high probability supply because it has got inducement, it has swept liquidity, and it has a strong bearish shift. Everything is perfect about this supply. So there we can expect some reaction. At least if the price doesn't continue, we can expect some strong reaction. So yeah, let's wait for some H1 confirmation. Suppose if from the H1 perspective, we see that the H1 swing structure is now currently almost bullish. Suppose if I get a candle closure, then I can confirm this as an H1 bullish break of structure. Then I can continue look for sales. Then this becomes much valid because this supply can hold, because we saw that this is a very high probability supply. So this supply can hold, and if we get a chalk bearish, there is nothing to the left from which the price can react to. All we have this um, demand zone, and here we have a pivot demand. So I have a lot of risk to reward to target from this fresh supply, and then play this swing pullback. So that's a very good trade for me. But unfortunately, what deemed to be wait a minute. Yeah, price did chalk bearish, but it did not mitigate any supplies for me to look for sells. That was one push down into the demand zone. So I was not interested in looking for sells buys directly from this one, because price did not close above the swing high. Remember, price has just swept the H1 swing high, which means that this swing low is still weak and price can push down to take out the swing low. If there was a candle closure, then there was I could have looked for M15 entries right here, but since there was only a sweep of the swing high, I was not interested in looking for longs directly from here. And sells also, there was no pullback, so I was not able to look for sells. So that's how the session ended. you know um, this POI actually gave some strong reaction, Once a strong reaction is completed, it mitigated the demand zone and continued the daily structure. So last day of the week, what we have, definitely we need to discuss about this one. The daily, the internal structure has shifted bullish, and now we can expect this bullish structure to hold till the price takes out the swing high. But for now, what we can expect is, this demand is holding the price right now. We can expect the price to mitigate the demand zone. So technically, I'm saying that we can look for sells. So this is the 4-hour chart, and here you can see some sell side liquidity, and there is a strong demand zone. So I can look for sells targeting this demand zone if the H1 gives me some structural confirmation. But I did not get any structural confirmation in the H1. There was some kind of bearish, a bullish candle. So I expected some sweep of this one and push down. At least I could have looked for sells from this one, but nothing kind of that happened. Price just consolidated between these high. It did not even cross the Asian high. It just took the Asian high and again it consolidated. So it was a nothing day. um, nothing happened as per the what I expected. So just consolidation. So yeah. So if you had taken LC1 seriously, then um, you could have got one losing trade and one winning trade. The net return would be based on your take profit. If it's 1 to 3, which most people used to do, then it would be plus 2 hour for this week for XAU. If you are a conservative trader like me, like there would plus 0 hour. I always say plus 0 hour because uh, we are still in the game. So that's what I mean by that plus. Okay, anyway, that's the end of the session. So it was a good trading session, but with one missed trade and lot of LC1 trades. Let's see if I get that psychological courage to take LC1s in the future. Then definitely, I will take and increase the number of trades that I'm taking, and obviously, there will be slight reduce in my strike rate, but definitely the net revenue rate increases provided if I am taking the Chelsea one seriously on every occasions and not getting feared upon. So yeah, that's it from my end, and you can just leave the comments if you have any doubts or if you want any new kind of video. So that's it from my side. Cheers, guys. See you on next week on a weekend. Until then, happy trading.